Every day, chat and chart live during the New York session. Here, real traders share the raw truth, their mindset, technical analysis, and execution. This is where real traders show their skill set. Welcome to Tradin TV. This is your stage to shine.
Hello, hello. Hello, good morning. All right. So, hello, everyone, and welcome to London Session Open. This is your weekly analysis session. This is Saif Qaddoura, your host, and today we will be reviewing what we have this week, what high impact news we have, and we're going to take a quick look on the charts to make sure that you're well prepped for the week ahead. All right, so let's get to it. Heading into the trading week of September 8th to September 12th, 2025. Markets are coming off a volatile prior week from September 1st to September 5th, where weak jobs data, just like we had the NFP on Friday, the actual numbers came in at 22,000 new jobs added in comparison to 75,000 jobs expected. This sparked recession fears, but boosted the Fed rate cut odds to 100% for a 25 basis point cut, with about 12% chance of a 50 basis point rate cut. The S&P 500 had hit a record high at 6,502 points midweek before slipping to slipping 0.3%, and it closed the week up 0.3% to close around 6,482. Nasdaq rose 0.08%, which is insignificant, to 23,652 despite tech dips, and Dow ended lower amid tariff uncertainties. Now, Bitcoin pulled back sharply. Gold rallied to near 3,600, which was my target, as I told you before on my gold trade, swing trade. I will show you now on the charts when we get to that. And the dollar index weakened on cut bets, of course. Geopolitics added some caution because the US-China tariff truce, as I told you before, extended to November 10th. But China continues boycotting US soybeans, shifting to Brazil and Argentina due to the 20% to 30% duties, impacting agricultural stocks. No major Ukraine escalations yet, but ongoing talks could sway energy. What else do we have? Risk sentiment is risk off. The overall mood is risk off, but hopeful on cuts. We have dovish data that could rally assets. And from this week, if we saw any hawkish prints, because we have CPI and some inflation numbers, if we have hawkish prints, that might strengthen the USD. Now, I think let's move to the high impact news calendar now. All right. Okay, as I told you, we have this week's heavy on inflation. We have US CPI, PPI, and we have some policy coming from Europe. We have the ECB rate decision. They might cut rates, they might not cut rates. We'll see what happens. This will be on Thursday. And this could fine-tune Fed bets. So whatever comes up with ECB, whatever they decide, that could somehow affect the Fed's outlook. Okay, so I'm going to start with the calendar. So remember, guys, the times here are in Dubai time. Okay, so GMT +4. This number is already out. today we have like the only high impact piece of news we have today is the Japanese GDP, which was the previous was 0.3 and the forecast was 0.3, but it actually came in at 0.5. It was this morning. So it came in at 0.5. So we saw a jump in the JPY, obviously because of this number. But I believe the USD JPY will be dropping back down soon. We'll check the charts and see how that goes. All right. So tomorrow, which is Tuesday, we don't have anything. So we have Wednesday. Wednesday is an important day. We have PPI, which is the Producers Price Index. The previous number is 0.9%. The expected number is, or the forecasted number is 0.3%. So if that comes in high, the USD might strengthen. It would imply that the USD wholesale inflation is hotter, so that could delay cuts. But I believe that whatever that comes in, it wouldn't delay the 25 basis points, but that might affect the 50%, the 50 basis point rate cut odds. Yeah. So that could, if that comes in higher than expected, that could boost the yields and the USD. The crude oil inventories, the previous number was 2.415 million barrels. That came in last week. It was higher than expected, so that was bearish for the oil prices. No forecast as of now. The markets are not forecasting anything, or the numbers are still not out, the forecast numbers. So if that comes in higher than the previous or higher than expected, we expect a drop in oil, because high supply means low prices. The higher the supply, the lower the prices, okay? Because if you have, like, think of it this way, let me explain demand and supply real quick. So if there's a lot of something, that it only makes sense that it's not as expensive, right? So if the crude oil inventories come in higher, that means that there's a lot of oil, so no need for it to be that expensive, okay? So prices drop. What else do we have? We have the 10-year note auction. That's a high impact news for bonds. So that's for bond demand mainly. High yields signal hawkish sentiment, which would hurt equity. So if it comes in higher than the previous or higher than expected, that would be good for bonds and bad for equities. But given the situation that we're having now, that the Fed is going to cut rates soon, like in 9 days' time, I believe that the new notes or the new securities that will be auctioned wouldn't have so much, like, it wouldn't be higher than 4.25 because markets are expecting a rate cut. All right. So what else do we have? Wednesday is done. Yeah, Thursday is the big day. So we start with the deposit facility rate from Europe, from the Eurozone. The previous was 2%, the forecast is 2%, and we're waiting for the actual number, which could, if it comes in lower, or if they cut, that would weaken the euro, which would boost stocks. And if they hold at 2%, that would strengthen the euro. Okay. Then we have the ECB interest rate decision, which is the most anticipated number on Thursday. We have that's a very high impact number. If that shows the ECB path. So if ECB cuts rates, that would rally euro assets, and if they don't cut or they increase, which is off the table, by the way, but if they increase or they hold, that could be positive for the euro or hawkish for the euro. Okay. What else do we have? We have the core CPI. We have the core CPI for the month of August. The previous number was 0.3%. The forecast is 0.3% as well. So if this comes in higher, that could hurt the odds of a 50 basis point cut, which in my opinion will not happen. Powell knows better than cutting 50 rates at the beginning of his cutting cycle. So I think he's smarter than that. He will cut 25 points. These numbers could affect the tone that Powell would use in his speech or press conference after the interest rate decision. So there's a term that is used, I would like to explain to you, which is a hawkish cut. So they might cut rates, but the tone remains hawkish, meaning that they cut rates, but eventually in the press conference, Powell would say, this is only to boost the economy or boost growth, but in reality, we don't need to cut anymore, and we will be data dependent. So whatever data we get, we will react accordingly. But that doesn't mean that we are starting a cutting cycle or an easing cycle. All right, so that could be a hawkish cut, or this could be a dovish cut, which would mean he would cut 25 points and then keep cutting every 2-3 months or every month as needed. Okay. So same goes for the CPI, which is the headline CPI. That's the core CPI. Core CPI excludes the prices of energy and food. The CPI, the headline CPI, which is year over year, the previous was 2.7 and the forecast is 2.9. So last August, from last year, inflation was at 2.7%. The forecast now is 2.9 for this month. So if it comes in at 2.9, that could be positive for the USD. If it comes in higher, that would be very positive for the USD. If it comes in lower, that would even raise the rate cut odds, and we might see even higher than 25% or 20 or 30% chance of cutting a 50 basis points. Okay. CPI also month over month, same explanation. And then we have the weekly number, initial jobless claims. The previous number was 237,000. The forecast is a slowdown in that number, so that which is positive for the dollar. So if it comes in lower, that means less people are claiming that they're jobless. So we're good. And then we have the ECB press conference, which the head of ECB would be speaking and discussing their path. What's their path in the future for cutting rates or holding rates, or how's inflation doing and how's the economy doing and how's the labor market doing. And then we have the 30-year bond auction, which is the previous number was at 4.8%, 4.813%. What that means is that that's also a high impact number for the bond market. So I believe that the participation in this bond would be higher than the 10-year one, because people are uncertain about the next 10 years, or less or more uncertain about the next 10 years than 30 years. So I think the participation in this one will be higher. And let's see what we have on Friday. Okay, on Friday we have UK's GDP, which is the growth number, gross domestic product for the month of July. The previous number was 0.4%. The forecast is 0%, so zero growth for the month of July is expected. So if it comes in lower than 0%, that means they're entering the danger zone. Okay, so if it comes in lower than 0%, or it comes in at negative growth for 2 consecutive quarters, that could mean a technical recession. Okay. So that's for UK's number. Euro, we have the German CPI. German CPI is the previous number was 0.1%. The forecast is 0.1% as well. So no change. The actual is expected. The forecast is 0.1%. So it's expected not to rise. But if it comes in higher, that could boost the euro and would mean that the ECB shouldn't cut rates anymore to control the inflation. But if it comes in lower, it means that the ECB have some what's it called? They have some space or cushion to cut rates and boost the economy. All right. So that's it for this week in terms of the economic calendar. So no major holidays, but we need to watch ECB for euro volume and thin post Labor Day trading could amplify moves. But I think the most important day of the week would be Thursday. All right. So let's see what we have trending. All right, so basically the Fed focus and rate cuts, that's trending. Crypto volatility, that's also trending. Tariffs and geopolitics, trending as well. Stock picks and sectors. Undervalued post dips in Apple, Tesla, AI like NVIDIA, and rotation to small caps. So normally when the large cap companies like Apple, Tesla, Amazon, NVIDIA, Microsoft, you name it, when investors start moving away from those, they rotate or they move their money into small caps, which is Russell 2000 companies. Okay, so there are 2000 companies, medium to small cap, all under Russell 2000. So that's the index that you should be looking at if you're trading small caps or small cap companies. Okay, and so Russell 2000 recently, like past week or two, it's been gaining momentum. Okay, so the past week it gained 3.3%. This week it closed at up 1.5%. So it's gaining momentum. And the broader economy debates like stagflation from tariffs, small business hits, and I believe we covered all of that. But stagflation, for those who don't know, stagflation means that the inflation stays high and the growth or the economy stagnates. So no growth, and at the same time we have sticky inflation. Inflation is not going away. So if you raise rates to control inflation, that could affect your growth, which is already, you have a stagnant economy. So if you raise rates, that would hurt your growth even more. If you cut rates to boost the economy, that would mean inflation going out of hand. So that's a tricky place to be in. All right. So I think that's it. Anyone has any questions on what I just explained before we move to the charts? Let me check. Okay. Okay, so Forex to Freedom is asking, which side of the news am I watching? What do you mean? Can you please explain more? What do you mean by side? Good morning, good morning. Gold view, we'll get to that in a second. Good morning, Sabaho. Hello, hello. From Bangladesh. You're welcome, you're welcome. Okay. So guys, do you have any questions before we move to the charts? Okay, we'll move on. So let me see. Let me stop sharing this and let's share the charts. Done with this. So where are my charts? There they are. See, start with the weekly. Let me share my screen. Before do this. There it is. One second, let me. Okay, it's shared, all good. All right, guys. So let's start. As always, we start with the US dollar or the dollar index. All right. So what do we have here? The week also closed bearish and it got rejected. And I'm expecting it to reach here. So 95.6. Okay. Let's move to the daily. Daily, I also see that it's going down because we had a range here. This is a range. Once we break below, and ranges usually are continuation patterns, guys. For those of you who don't know, they are continuation patterns. So we had a sharp move down, we had a consolidation, and then once we break out of this, we'll be moving towards here. So let me check if we do this and this. Yes, it matches it. So most probably we'll see dollar breaking below. Let me see, what is Mr. Fibonacci telling us? Okay, so yeah, we're moving to the same area. So I believe that I'll be waiting for DXY to reach 95.3, 95.6. So somewhere around this area. And we have it under all moving averages, all major moving averages. The dollar index is below all of them. All right, so let's move to the next one. Let's see, 8 hours. It shows the exact same thing. So no need to talk more about it. Now let's go to gold. So congratulations to me for reaching my target, which is 3,600. We secured a clean 1 to 5 on this, 1 to 5 risk reward on this. The trade, for those of you who didn't catch it before, the entry was at 3,300. The stop loss was at 3,240, and the take profit was at 3,600. So that's a 1 to 5 risk reward. And once we broke above this area, I moved my stop losses to break even. So it was risk-free for the past, I believe, 5 days, 5 trading days. So that's that. Let's see what it will do next. Okay, so that's the trade. Yeah, that's it. Let's delete it. Congratulations. Let me see. It's very bullish. It's above all moving averages, above the what's it called, the outside the bands. So I believe it will keep going up to 4,000, but I'll be waiting for some corrections in gold to even buy more. For now, I'm out. I will not be trading swings for the rest of the year. I will stop trading for now, unless I see something very, very clear and very tempting. Okay, so the daily also the same, it's very bullish. We're above all moving averages and outside the bands. Okay, so let me see what is Fibonacci telling us. So the next target would be 3,670. But I believe we will see 3,400 first. Like it will look something like this. Like even if we reach here, for example, I believe that we will see this level, like for 3,400 something, then we move higher. Okay, so let me move my trend line. Okay, so this is done. Let me remove it. And this is done. Let me remove it. Yeah, so we might be heading to new highs today, and then we might see a drop back to these to this area, and after that we might be moving up back up again. But I don't know where it will stop, because on the left we have nothing. We don't have any history to depend on. We have no history to analyze based on. So I can't. We don't have structure points. We don't have resistances. We are at all-time highs now as we speak. So I don't know where it will stop. But once it gives me a 25%, let's say when it turns with 25% of the price or the movement or the previous movement, then I will know that it started to correct or it started to retrace. So I'll be waiting for the retracement to end. I might do some very fast trades here, like hit and runs on the way down to the trend line, but I'll be very careful and like have very controlled risk management. Once we reach here, I might be buying with my stops below here, okay? Because that's how you trade trend lines. You buy at the trend line once you get a setup, and you place your stop loss below the previous low. So that would be the trade I'll be looking for if it gives me this trade this year, because as I told you, I'm stopping. I'm gonna stop trading for the rest of the year. I'm done trading this year. So it would look something like this. 1 second, please. Yeah. Let's see. That's a 1, 2, 3. So 1, 2, 3 risk reward. So that's not very tempting. But I'll see if I could like manage a better entry than this. We'll wait and see. But I think we have a good entry on euro. Let's move now to the euro. Yes, there it is. I made this last week on Friday. I'm waiting for this entry to trigger around 1.1670 with stops below this range, targeting 1.1970, which is a 1-to-4 risk reward ratio. Let me start with the weekly chart. Okay, so it tried to go down, but it got rejected for 3 consecutive weeks. That's a bullish sign. Once we close above this area, which is above 1.1770, that could mean the start of the impulsive move to the upside. So we're not very far from that. We might have it this week. Daily, I'm waiting for a retracement or a correction towards this area, which is 1.1675. I want price to correct towards this, or like give me a 50% retracement of this engulfing candle, or as some others might call it, a fair value gap. I don't know if that's a fair value gap or not, but I think so, because like once it broke here, it didn't fill this. So we have a fair value gap here. But that's not how I trade. I'm just like trying to sound relevant. Okay, What else do we have? Let's see the 8 hours. Yeah, it's doing great. Euro is going up. It's confirming that the DXY or the US dollar is going down. So that gives you extra confirmation on your trade. So I will be looking to buy Euro USD somewhere like 40 pips from here to the downside. I will buy Euro. So if I see it at 1.1680, 75, I will buy. But again, that's a very that would be a small trade. I wouldn't risk more than 1.5%. In comparison to the gold trade, which I risked 4% and ended up with a 20%. So okay, let's move now to GBP USD. That's the weekly. Yes, we got filled. Remember, guys, we placed this trade together on the live. I don't know if any of you were here, but I believe so because I see same names repeating. So I believe you saw this trade. We placed this trade together. It got filled. Stops are below this area, and we're targeting 1.37. So that's for the weekly, and it's very bullish. We have UK's GDP, as you saw previously when we were discussing the calendar. So that might amplify the move, or might speed it up, or might slow it down. So we'll have to wait and see. Okay, so that's for the weekly. Let's check the daily. Yeah, I think it's rejecting beautifully from the 126-day moving average. We saw it rejecting here, and then we saw it rejecting here. So it's doing well on the weekly, on the daily. That's a good trade to be in. And on the 8 hours, we're above the prices, above all moving averages, the like fast ones and the slow ones, like the major ones and the minor ones. Okay, what else do we have? Let's check USD JPY. That's a trade that I'm waiting for. So that's how it would look like, but we had some volatility the previous 2 weeks. Last week, it tried to retest the trend line from the outside. Now, as you can see, it's beyond the trend line. It's below the trend line. So it came back to retest the trend line to check if the price has the enough momentum or enough steam to go above or back above the trend line to continue the uptrend, but that didn't happen. And as you can see, we have a classic price pattern, which is the bearish flag. This is the flag, and this is the flagpole. So if you do this, we might be looking. What happened here? So if you do this and try to project into the future, you will see it going to $131 or 131 yens per $1 US. So the yen will strengthen against the USD, which also confirms the DXY path of dropping more. So once this move starts, I believe we'll get a nice 1-4 or 1-5 risk reward ratio on this one. Let me check if you have any questions before I continue. USD JPY may revisit 151. I believe it did last week. So like it was there, like almost there. Maybe yeah, it was there last week, or no? Let me check. No, it was there back in July. You know what? I'm not sure, but if it will, and if it breaks 151.40, I believe that it will start going up or go back up. So that's a possibility, of course. I'm not saying it will not happen, but if it does happen and it breaks above 151, I believe it will continue going up because it's been charging and it's been accumulating liquidity here for quite a while now. It's been accumulating liquidity for the past 5 months. So in technical analysis, what we say is the bigger the formation or the longer it takes to form, the bigger the subsequent move would be. So I believe this trade will be, or the USD JPY will be dropping down, not the other way around. Okay, we are intraday traders, bro, so look at the 1 hour time frame. Okay, I will look at the 1 hour time frame, but just to make sure that you understand the point of this live stream is that to give you the bias for the week, or for the not even the week, the month. So I want you to be prepared and know where prices might go and what the important levels are. But sure, what do you want me to go to? Where? You mean gold, USD, JPY? Okay, someone is asking what are the fundamentals that can drive the US dollar higher? Only if the CPI numbers come in higher than expected. We have CPI, we have PPI. Any inflation number that comes in higher than expected would boost the US dollar. Yes, and send lower and string the yen. Yeah, as I told you, if we have any surprises from the inflation numbers this week. So yeah, Adept Mind is asking what's the next move for gold after the 3,600 all-time high. I believe that it will keep going higher until we see a reversal pattern, or like a reversal candlestick pattern from the all-time high. As of now, we don't know because we don't have any history on the left of the chart, so we cannot just like predict or like decide that at 3,650 it will start dropping. Nobody can tell you that, and it's not humanly possible. So we are analysts, we are traders. We don't predict. We study the charts, we analyze them, and based on our analysis, no guesswork. We don't guess. We see based on the analysis and based on the numbers we have, we execute and we react. All right. So you shouldn't be like bothered where the gold would stop. Just wait for it. As long as it's going up, keep going up with it. But as long as it gives you a reversal pattern, or like, for example, it builds a structure point, or it stops at a certain point and makes a new resistance, that's where you might be thinking that it might be stopping here. And then you can start selling as intraday, of course. Okay. Do the oil rates affect gold rates? You mean the gold oil prices affect gold prices? They shouldn't, no. But sometimes in times of uncertainty and wars, they might have some kind of correlation, yes. But in general, no, they do not affect each other. Okay. So guys, I will move to, we discussed Euro, GBP, USD, JPY, and let's take a look at NASDAQ. What do you say? Yeah, it closed positive last week, as we saw. Let me see how positive it closed. So yeah, it closed like up 1% from the week before. The daily is also bullish. It's still bullish. 4 hours is also, yeah. Okay, so on the 4 hours, we have this. We have an engulfing candle, a strong engulfing candle that was on Friday. That's near the end of the session. It closed lower, and now it might be retesting this. You name it, fair value gap, engulfing candle, or whatever, and then we might be seeing it doing this, or simply we can do this. So let's wait and see. So we have this level here, the 23,000, which is the all-time high, basically. If we break above this, we are going up like another like 400, 500 points minimum. And if we are not going up, this might be the start of a big correction to the downside. So where exactly could it go? Yeah, we might be moving towards here, like 21,500, 400. So that's a huge move, 2,000 points move. Let me check. Be looking at, yeah, we'll be looking at a 9% correction. That might happen. So where are you? You asked for 1 hour analysis. Forex to freedom. Which instrument do you want me to analyze on 1 hour? I'm giving you this favor, so use it. Which time frame? I believe most of you trade gold, so let's go to gold. 1 hour. As you see, we are in an uptrend. Every time it touches this trend line, you can buy and target higher. Let's see if we have any kind of divergences. We have, yeah, we do have divergence, but that doesn't mean that it will reverse from here. Just like you need to be careful buying gold. Don't go in on like full risk. If you normally risk 1% per trade, just go in like and risk 0.5% in this trade, because you have this negative divergence. The price is making new highs, but the indicator or the MACD isn't making new highs, which makes a negative divergence. So we need to pay attention to that. Okay. Let me see. So what we don't want gold to break, to if we're still going up, we want it to stay above 3,540. Okay, if it breaks below this level, we might be heading towards 3,480, which I want that to happen because I want to buy more gold. But let's see how that goes. Okay, guys, any more questions? You're welcome. You're welcome. Nasdaq, we already did that. All right, guys. Thank you very much for tuning in, and I'll see you on the next one. Take care and trade responsibly. Cheers.